Wow, you've really been digging into the crypto markets, haven't you? Look at this pile of analysis.
Yeah, it's been pretty interesting to follow lately.
It's a lot to process, though. But hey, that's what we're here for. Let's take a deep dive together.
Sounds good to me.
We've got this recent report. It covers Bitcoin, Ethereum, obviously, and a bunch of altcoins. So, everyone's asking, what's the deal with this dip? Is this it, the bear market? Or just like a temporary blip?
Yeah, the million-dollar question.
Right. And then, which of these coins are like actually showing potential? Which ones should we be like maybe a little cautious about?
Lots to unpack.
Definitely.
It can be really hard to separate the signal from the noise in crypto, especially now.
Oh, absolutely. Okay, so one thing that really jumped out at me in this report was the fear and greed index. It's definitely giving off some cautious vibes. What's that telling us about like the overall mood of the market right now?
Well, the fear and greed index, it basically reflects the overall sentiment, right? And while it's true there's, more caution in the air right now, the underlying market momentum, it's still actually pretty strong.
Okay, interesting.
I mean, barring any unforeseen events, like a major regulatory bombshell or something.
Right, right. So a little fear isn't necessarily a bad thing.
Exactly. Healthy even.
Okay, but this negative premium index, this one's kind of new to me.
Oh, yeah.
The report says it's suggesting some selling pressure, especially from the U.S. markets, and that the correction is like going deeper than expected. Can you explain what that means, like for those of us who aren't, Wall Street wizards?
Sure, sure. So the negative premium index, basically it tracks the price difference between Bitcoin on the spot market, so, buying it right now, and the price of Bitcoin futures contracts.
Okay, got it.
When it goes negative, like it has, it means traders in the futures markets, especially in the US, they're selling more than they're buying.
So they're betting on the price going down.
Yeah, it's a measure of like their expectations for Bitcoin's future price. And this, along with some other things like the recent ETF trading, the timing of market closures, holidays and stuff, and just all the global events happening, that's all added to this deeper correction.
So basically a perfect storm, kind of.
In a way, yeah.
Makes sense.
Mm-hmm.
That explains the why behind this dip. But how worried should we actually be?
Well, you have to remember, crypto is still a young market, right? It's super sensitive to like any changes. And part of this dip is just a natural reaction to some of the inflated prices and those crazy high funding rates we saw recently. As those funding rates calm down, we should see the market stabilize a bit.
Okay, funding rates. I feel like I hear that term everywhere, but I'm not always sure I totally get it. Can you break it down for us? Like explain it in a way that even I can understand.
Sure, sure. Okay, imagine like a seesaw, right?
Okay, I like visuals.
One side is traders who are betting on Bitcoin going up. We call those long positions. And the other side is traders who think it's going down, short positions. Funding rates are kind of like a fee that the side that's currently higher on the seesaw pays to the side that's lower.
Oh, interesting. Okay.
So when most traders are bullish, meaning they think the price is going up and prices are climbing quickly, those funding rates, they can get really high.
And that makes some people jump ship.
Exactly. It incentivizes some people to switch sides, sell off, which helps bring things back into balance.
Gotcha. The seesaw analogy, that actually makes a lot of sense.
Yeah.
So high funding rates, that could actually push the price down.
Yep. They can definitely create selling pressure.
Makes sense. Okay, let's focus on Bitcoin specifically. The report mentions these crucial support levels between $92,500 and $91,400, and then some resistance at $94,500, $95,600, $97,300, and then obviously that big psychological $100,000 mark. So what happens if Bitcoin breaks above or below these levels? Like, what's the significance?
Those are the key battle lines, basically. The support levels, especially that $92,500 to $91,400 zone, that's historically where buyers have stepped in and stopped further drops. If Bitcoin breaks below that, well, we could see a much deeper correction.
Oh, how deep are we talking?
Potentially down to the next major support, which is...
Which is?
Well, it's a bit lower, but we don't need to get into those specifics right now.
Okay, fair enough.
On the flip side, if it rallies above $95,600, that's a huge sign of strength for the bulls. Could mean a push towards $100,000. And breaking that would be a massive psychological win.
So it's like a tug of war between the bulls and the bears.
Exactly. They're pushing and pulling the price around these key points.
And speaking of pushing and pulling, what about Bitcoin dominance? It's at 58.40 right now.
Right.
What does that tell us about, like, the overall market dynamic.
Right. So Bitcoin dominance, it's the percentage of the total crypto market cap that belongs to Bitcoin, right?
Yeah.
It's a good indicator of like how much confidence the market has in Bitcoin compared to all the altcoins.
Okay, yeah.
So if we see it climb to like the 59.50, 60 range, it means investors are choosing Bitcoin over altcoins. That could mean that some money leaves those altcoins, slows down their growth. And if it goes above 60, that could be a real shift, like the start of altcoin season where, altcoins start outperforming Bitcoin.
Interesting. So Bitcoin's in the spotlight, but we got to keep an eye on the other players too. What about Ethereum? How's it holding up?
Ethereum seems to be stabilizing a bit around $3,340. It's facing some resistance at $3,600, though. If it breaks through that, that's a really good sign.
Bullish, right?
Very bullish. But, we need to watch those support levels at $3,200 and $3,050. If it drops below that, well, could be more weakness coming. And don't forget, those Ethereum ETF decisions, those are coming up. They can have a huge impact.
Right, the ETFs. Everyone's
Yeah.
talking about those. So what kind of impact are they expecting those to have?
ETFs or exchange-traded funds, they could be a game changer, seriously. They make it easier for big institutional investors to get into Ethereum without, actually holding the cryptocurrency directly. Oh, I see. So that could bring in a ton of new money, drive demand way up, push the price higher. But, of course, if those ETF applications get delayed or rejected, well, that could have the opposite effect, maybe even cause a price drop.
So it's a gamble, kind of?
In a way, yeah. There's always risk in crypto.
Okay, so lots of exciting stuff in the long term, but with all this uncertainty right now, are you feeling cautious in the short term?
Definitely. Caution is key, especially with how volatile things are. We're still dealing with the fallout from all those over-leveraged positions from earlier this year, And then there's all the geopolitical stuff. You never know what's going to happen there.
Oh, yeah, true, true.
My advice, avoid those emotional trades, Keep a close eye on those support levels we talked about. And most importantly, don't put all your eggs in one basket. Diversify.
Right, no panic selling. Got it. What about, like, Bitcoin Cash and all those meme coins? What's going on with those?
Bitcoin Cash, it tends to follow Bitcoin pretty closely. It's got solid support around $2,000, and some analysts are saying it could hit $530 soon. Meme coins, though, those are, they're a wild ride. All that hype around the Solana meme coins right now, that could lead to some quick profits, but they're super risky. Meme coins are driven by hype more than, actual value.
Yeah, that makes sense. So while there might be some tempting short-term plays, it sounds like, sticking to a solid strategy, one that's based on the fundamentals, that's the way to go.
Exactly. This dip, it's a good reminder that managing risk is essential in crypto. It's a good time to look at your portfolio, make sure you're comfortable with how much risk you're taking. Maybe think about diversifying if you haven't already.
That's great advice. I feel like this deep dive has been so helpful. I have a much better understanding now of what's behind this correction and, where things might be headed.
Good, good. And remember, this is just a snapshot of the market right now. Things change constantly in crypto. Keep learning, stay curious, and never stop asking questions.
Words to live by. All right, that's all the time we have for today's deep dive. We'll see you in the next one.
See ya!
Bye.